All right, so I'm seeing some more bear arguments about Palantir stock that are more or less misinformation, although maybe they're just lazy analysis. Regardless, I'm going to refute them here today, so let's get right into it. As I was scrolling on Twitter today, this tweet right here popped up saying that Palantir is facing a triple whammy, and it goes on to lay out a couple of bear arguments about why they think Palantir stock is going to have a tough time recovering. But like I mentioned, this is either lazy analysis or misinformation because the arguments that they are pointing to are essentially cherry-picked facts out of context or just plain wrong. So let's break it down one by one, and I will show you why none of this is actually correct. So according to Winvesta, the triple whammy is slowing growth, mounting losses, and the fact that Cathie Wood has liquidated her Palantir investment. Let's start with the slowing growth argument. So they are saying here, although the commercial business is growing, the growth is not as fast as the slowdown in its core business. And by core business, they're referring to the government side of the business. Well, is that correct? In fact, it's absolutely not. Now, I will acknowledge that the rate of growth of the government side of Palantir's business has gone down from Q3 to Q4 2021. In Q3, the revenue for the government side of the business grew 34% year over year, and in Q4, the revenue for the government side of the business grew 26% year over year. So that's an 8% decrease in the rate of growth of the government revenue. But it's certainly not a decrease in the actual government revenue, which if we look at this slide, you can see quite clearly that the amount of revenue for the government side of Palantir's business has been steadily increasing year over year. However, even though the government revenue growth decreased by 8% quarter over quarter from Q3 to Q4 of last year, that's not necessarily pertinent for two main reasons. First of all, it could just be an issue of timing of contracts. And realistically speaking, we need to see this pattern emerging over a much longer time horizon to put any weight into it. Also, the more important thing to mention is that the commercial side of Palantir's business has been growing so absolutely quickly that it's completely eclipsing this little slowdown in the growth rate on the government side of the business. And we can see that right here by looking at these figures. So last year in Q3, Palantir's commercial revenue growth was 37% year over year, and in the US, the commercial revenue growth was 103% year over year. And in Q4, the total commercial revenue growth was almost 50%, 47% year over year, and the total US commercial revenue growth was 132% year over year, which is a significantly higher increase in the growth rate than whatever we're seeing on the government side of the business. And this slide here from Palantir's Q4 earnings report illustrates how they're basically doubling year over year for the past 2 years the size of their US commercial business. Now, does this look like a company whose revenue growth is in decline? I don't think so. And one final point to mention here is that Palantir increased the size of their sales force quite significantly from 2020 to 2021. And what's not even reflected on this slide here is the fact that they're hiring a few hundred more people in sales and marketing. So that is definitely going to, as they say right here, fuel the growth of the company's revenue in fiscal year 2022. But what about the second part of the triple whammy that Winvesta is talking about? Well, they're saying that Palantir's been in operations for over 2 decades and it's never turned a profit, and that it also reported a loss of 156.19 million during Q4 of last year. Now, this point is not actually a case of misinformation. What it is a misrepresentation of the facts and completely taking them out of context, because there's clear reasons for why these things have happened. First of all, Palantir is focused on growth and not on profitability. And in fact, they have invested heavily in the past into things like research and development, and now they're investing into their personnel, their HR, the people that they have actually working on product development and deployment through stock-based compensation. And actually, the loss that was reported in the last quarter and throughout most of 2020 and 2021 was related to those sort of administrative expenses. And those aren't actually affecting the operations of the business itself. In fact, Palantir has been cash flow positive for a number of quarters, and their gross profit is actually hovering around 80%. And so yes, while Palantir did see an accounting loss last quarter, they are generating positive cash flow from operations, and with a growth-focused tech company like this, What we really want to see is them reinvesting all of their money into continuing to expand their client list and to bringing in new business. Because really, if they started focusing on profitability now, on paying dividends or buying back shares or any other use of their excess capital, that would not actually be an efficient use of resources and would probably hamstring the company in the long run. So as an investor, the fact that I'm seeing that they're currently still not profitable net, it's not actually a huge issue. Moreover, if we look at the trends, you can see that profitability is actually steadily trending upwards, and Alex Karp, the CEO, has definitely said that this trend will continue, that things like stock-based compensation will taper off as we move forward, and that everything is really headed in the right direction. Now, you don't have to take the CEO of the company's word for it, because if you look at the numbers, it's as clear as day right there. All right, turning now to the final point of the triple whammy that Investa is talking about, the fact that Cathie Wood exited her Palantir position completely. Now, I'm not gonna pretend like this had absolutely no impact, and it's definitely not demonstrating a bullish overall sentiment towards the company. However, let me just say this. Cathie Wood and ARK Invest realized a loss of almost $400 million when they cashed out of their Palantir positions, thus exemplifying the persona of buy high, sell low, because since she sold, the company has been on a little bit of a tear, I'm not gonna lie, and I have actually very much enjoyed seeing the stock price increase over the last couple of weeks, basically right after Cathie Wood sold. And while Cathie Wood was busy selling her Palantir shares, other institutions were busy buying them. And as you can see from this graph here, the percentage of institutional ownership in this company has been steadily trending upwards, which I do think is a very bullish signal for this company, because it means that people are starting to be serious about it. And when you see institutions buying in en masse like this, I think it just shows that there's overall the sentiment that the company might be undervalued based on its current prices. And so if you're scrolling on Twitter or Reddit or wherever you get your news from, and you see some articles like this that are basically spreading FUD, fear, uncertainty, and doubt, and that are cherry picking facts, taking them out of context, or just completely misrepresenting reality, you have to think critically, and this just proves how important it is to be able to do your own research and to do your own due diligence so that you actually know what's going on. Anyways, thanks so much for watching. Hope you enjoyed the video, and I'll see you later.